All right, D-Gens, let's jump into the swing alert. Swing alert means there's been a swing in volatility. We've gone up or we've gone down in a very short amount of time. And I think the part where a lot of people get this wrong or make the mistake is there's really two types of ways to trade it. The first here, where we want to follow the price action. And we're going to go through examples here. That's when, we're trending upwards, we come down, and then you get a bull swing, meaning we're going to go back up. Then the other type of swing is the reverse. That's reversing the price action. This one can be highly profitable too, but it's a little bit scary because if price is nuking, then you want it to go back up, but sometimes these things stay in motion. So we're going to go through examples where each one of these work and maybe one or two parts that you probably want to avoid unless you want to blow up your account. Okay, we're here on SPY, January the 11th, and we actually got three different swing alerts, 10:06, 10:10, 11:15. But let's look at how different these things are. Boom, 83% drawdown, 72% drawdown, still a 30% drawdown, but you get a max gain here of 304%, 251% if you held until the end of the session. But, there's no way you would have held these two. Why? PS 2.34, 304. It means we haven't really come down much. I have not even shown you the chart yet, right? We haven't even looked at the chart. But this is already telling you, hey, minus 304, we're not that low, okay? Minus 10.12, oh my God, we are low, baby. This is like the second strategy where we're talking about a reversal of the price action. Now when we come up and we look at the chart, okay, where are the first two swings coming in? They're coming in right here. Price has nuked, okay? This is a high volume trend following day. If we're going to take the opposite side, we want to be in and out. And you could have been in and out quickly on this, but it's really not a trade that we want to take because you never know how far it's going to go, especially at 136% above average volume. So this is 1, 2, 3. 4 down is a good spot to try, generally. But when this volume is this high, we go a lot lower. So we go 1, 2, 3, 5. And this is where the profitable bull swing comes in. And we actually get a reversal to the end of the day, and we get, practically mean reversion back to the open price, which is crazy. So thinking about it, this is like strategy 2, right? Because if we were looking to follow the price action, then right about here, we'd get a bear swing, right? Because we want to follow it. But this swing is for a reversal. And you never know when it's going to reverse, if it's going to reverse at all. But the one thing that I've noticed is that the reversal is never going to happen this early, okay? From 11:30, 12, really the 1300 hour window is when I prefer to start looking for it, definitely after 12. But if we're going to have this move start from the open and continue, you don't want to start looking for it until about here. Okay, here we're going to look at a swing that follows the price action. Okay? We open up, 450, 60. We go up 1, we're up 2 strikes. Okay? What happens next? We come back down. But here we get the bull swing come in, right? 10.24. And why do we like this here? Because it's going to follow the price action, and it has the potential to. These guys get killed, boom, let's take it back up. And when we look at how the rest of the day went, it's a perfect trade. This thing goes 377%. And you lose a little bit at the end, but it's probably like plus 250 at least if you just bought and held. So like this is like swing version 1, right? Because we want it to keep going. We're not looking for a reversal here. We came down a little bit and we wanted to keep going back up. All right, we're back checking out SPY 1023.23. I mean, look at this thing. Whoop, all the way up. How far do we get? 1, 2, 3, 4, 4.5, maybe 5, right? And then what do we get right here? A bear swing at the end of the day. And this thing goes 350%, 340%. Awesome trade. But this is another one where it's like, hey, bear above the blue line, but you're looking for the reversal, right? Because you're not expecting it to keep going up. So, I mean, there's different ways to trade this. I look at this thing here. There's a bull swing. Why do we like the bull swing early? Because we're close to the blue line and it follows the initial price action, right? Whoop. And then when do we look for that mean reversion or to come back? You know, this 1300 window. I mean, if you bought this one and held, you know, 282%, which is awesome. But the swing coming here at the end, good as well. So, you know, really, there's two different ways to think about it always. And that's we either want the price action to continue or we want the price action to reverse. If we want the price action to reverse, you need to be higher or lower significantly. And what I mean by that is if we were looking for a bear swing and we actually want to make money, then PS on that thing's got to be high. Well, let's look at this thing. PS 7.14. Okay? We're up from the blue, 4 strikes. I mean, the lizards are so good. They hit this thing exactly at 423. That is perfect. Now, the other way, if we want the swing to continue in the price action, right? What do we have right here? PS 1.36. That is perfect for a bull. So the two different ways, each can be traded successfully. Just make sure that, hey, if you're looking for the reversal, the bull's got to be below the blue, 4 strikes down, or the bear's got to be above the blue, 4 strikes up.